Time now to turn our attention to this week's Market Monitor guest who says she's positive on equities both over the short and the long term. She's Judy Saryan, portfolio manager with Eaton Vance. Judy, welcome. What a week, great week to have you here with us. Explain why you think this is not not a fatally wounded bull market.
Well, I'm very happy to be here, Tyler. I think that the move by the Fed and the comments by Bernanke indicate that the economy is growing. It's not growing too rapidly. It's not growing too slowly. It's just right. And I think that is really the key underpin of the market. So we're very positive about the market, both near term and long term. The Fed is basically on the track that they had set. There's really nothing new in what they said.
Judy, though, we did see a lot of volatility this week, and we've seen interest rates move quite a bit higher than they were a couple of weeks ago. Does that worry you at all? I mean, it's good for savers, certainly, but does it worry you about the market's ability to move forward?
The interest rate level has moved up. It was pretty dramatic in the last couple of weeks, but at this current level, the 10-year Treasury at 2.5%, that's still a very reasonable interest rate. I believe the economy can grow with that rate. It's not a problem for the housing market, and of course the housing market is key for the growth in the economy, but housing is still extremely affordable at record rates in terms of affordability. It would take rates going much higher before we saw that really affect or impact the housing market.
I think our viewers have their pencils ready, Judy, for a couple of your stock picks. And a couple of stocks on your list this week are banks, one big, one somewhat smaller. Let's start with the big one, which is Citigroup.
Okay, well, at Eaton Vance, we focus on fundamentals, and the fundamentals are very positive for Citigroup. There are several positive factors favoring Citigroup. There's an improvement in the capital markets activity. Also, Citigroup benefits quite a bit from the residential real estate market. In fact, they are going to be releasing $8.5 billion in reserves from the North American mortgage business. So that will be a very strong tailwind to earnings looking out this year. On top of that, the valuation is very attractive. The stock is selling at only 63% of book, a low PE ratio, and I think the stock can easily get up to book value.
I would assume housing would also help your next pick, which is Regions.
Absolutely. Regions Financial is a regional bank. About 55% of their portfolio is in real estate loans. So they definitely benefit very much so from the residential real estate market and the pickup in the real estate market. They're also selling at a very attractive valuation. They have a reasonable yield, and we're expecting very strong dividend growth out of regionals as well.
Let's see if we can squeeze in two more very quickly, 15 seconds for each. One is Sanofi, and the other is Philips, 66.
Okay, on Sanofi, it's a French-based company, great pharmaceutical company, very strong position in the diabetes marketplace. They've got one of the strong insulin drugs, and that business is doing very well. They've also got some very strong positions in the vaccine business. And on Philips, they became independent about a year ago from ConocoPhillips. They're in the downstream energy business, benefiting from several trends in energy. Strong free cash flow, over $4 billion we project this year, and potential to grow that dividend at a very nice clip. Very inexpensive stock, selling at about a 7 multiple on PE. So great stock.
I assume, Judy, that your funds own all of these companies, or your company does. Any other disclosures?
No, that would be the primary disclosure.
All right, Judy, thank you very much. Judy Saryan is portfolio manager with Eaton Vance.